Welcome to this week's look at the state of the New York City real estate market, where I take a look at the luxury market, the Manhattan market, and the Brooklyn market. I do it because I want you to be informed. It never hurts when you're a consumer to be informed. Welcome to this week's look at the state of the New York City real estate market. As always, I bring you the very latest news about what's happening in the real estate market here in New York City. Everything from the luxury market to the Manhattan market to the Brooklyn market. We're going to get started, as we always do, with the luxury market. This is for properties that are priced at $4 million and above in Manhattan. There were 17 contracts signed last week, 7 fewer than the previous week. Condos outsold co-ops 12-5. The number one contract signed last week in the luxury market was apartment 124. That was at 217 West 57th Street. It was a sponsor unit, so the buyer is buying this from the developer, and they were asking $66 million. Unit 124 encompasses the entire 124th floor. It has over 7,000 square feet. It includes 5 bedrooms and 5.5 bathrooms and a 31 by 50-foot living room with windows on 3 sides, offering sweeping views of Central Park and the city. A master bedroom suite with a gigantic bathroom and sitting room occupies the entire west wing of the apartment. This is Central Park Tower, which is a 1,550-foot tall skyscraper with 179 units. The building started marketing in 2018 as the world's tallest residential building. There are over 50,000 square feet of amenities that include indoor and outdoor pools, a fitness center, a children's playroom, and a club room on the 100th floor that includes a ballroom, a bar, dining facilities, and a cigar lounge. A similar sponsor unit on the 123rd floor closed in May for $48,489,876. Year to date, 29 units have closed in Central Park Tower, averaging about $5,132 a square foot, with an average size of 2,958 square feet. The number 2 contract was Penthouse 2 at 22 Bond Street, asking $17.5 million. It was reduced from $21,748,500. It started marketing off of floor plans in 2015 and has since cycled through 4 brokerage firms. Now completed, the triplex penthouse condo has 3,840 square feet, including 3 bedrooms, 3.5 bathrooms, and outdoor space totaling 913 square feet. The unit has high ceilings. It also has a roof terrace with an outdoor kitchen. This is a 6-unit building. It has a part-time doorman and a landscaped courtyard. Now let's take a look at the quick stats for last week. The total weekly asking price sales volume, $172,459,999. The average asking price, $10,144,706. The median asking price, $5,995,000. The average discount from original ask to last asking price, 4%. Average days on the market, 590. If you've been following these reports for the luxury market for any length of time now, you will probably be noticing that the discount from original ask to last asking price can vary quite a lot. This week we're down, it's down a bit, about 4%, but with the luxury market, we typically see, if we're looking at this kind of as a whole, it can be a little bit all over the place. So it's just good to keep an eye on it. Same with days on market. Some of these properties come on the market and they sell very quickly. Others start out with a They aren't quite completed yet. They're new development. They can take a while to sell. So this week we saw a pretty high number of days on the market, but that is in a way to be expected with properties at this level. Okay, that's it for the luxury market. We're going to move on to the Manhattan market. As always, feel free to post your questions below. Happy to answer any questions that you might have about the real estate market here. Let's take a look now at what happened in Manhattan last week. So what happened in Manhattan last week in the real estate market? Well, we're going to start with the 1 week look at the supply, at the contract signed, at the off-market properties in. Then we're going to take a look at what kind of market that we seem to be in, at least for the moment. The supply was down last week, almost 20%, 221 for the supply. The contract signed, 182. That's up a little over 11%. And the off-market properties up about almost 7%, 223. We continue to be in Manhattan in a buyer's market. We'll talk more about that in a moment. We're going to step back and take a slightly broader view. We're going to look now at the monthly pace. What we can see is the supply for the month was 1,174. That is down almost 33%. Very typical when it is this time of year. This is a kind of a seasonal decline that we would expect to be seeing. The contract sign, 730, up almost 11%. We saw a little bit of a bump there. And when we get into the more detailed charts, we'll talk more about what that may or may not mean. It looks as though we are seeing a bit of a bottoming of the decline that we were seeing in Manhattan in terms of contract activity and pending sales and things like that. But we'll get into that a little more in a moment. And the off-market properties, 904, that is up 26.43%. As I've been saying, there are sellers that if this market is not holding for them what they needed to hold, they will take their property off the market and decide to rent it out or just hang on to it and see where the market's going. Here are these more detailed charts showing you a month view of the supply, the pending sales, the kinds of things that many of you ask me for: price per square foot, median listing discount, things like that. This can be very helpful information, so I'm sharing it with you. If you have any questions about any of these charts, please let me know. Sometimes they're clear and sometimes not so clear. Now we're going to take a look at this supply. This is, again, for the Manhattan supply for the week. We can see that the Manhattan inventory is kind of ticking downward. Again, to be expected this time of year. If buyers are looking for new properties to come on the market, some may trickle in, but you're likely going to have to wait until February, March, basically until the next selling cycle begins, depending on how early our spring market begins. That's when you're going to start to see more properties coming on the market. If you look at the demand chart, you'll see that the pending sales are essentially flat this week versus last week, but overall the pipeline is not as robust as in prior years. Contracts signed ticked down just slightly. We do have a holiday week we're heading into and some quieter weeks ahead. We'll have to keep an eye on these signed contracts and see the seasonality is affecting the supply and the demand. This is an interesting chart, the discount to days on market. This is a really, really important chart for sellers to consider. Buyers, I think you've already kind of figured this out, many of you. But essentially, the longer the property is on the market, the more negotiability there is. And if you look at, let's say, if you take it all the way out to property being on the market over 120 days, the numbers show that the listing discount or the negotiability is over 10%. So sellers, here's something to keep in mind. When you put your property on the market, any serious buyer who is tracking the market is going to be seeing your property, and you want them to take action when they do see your property. So you really need to be in alignment with what's happening in the market. If you are priced too high, let's say you decide you want to price it high because you think otherwise you'll leave money on the table because you're going to be negotiating with buyers, that is possible but very unlikely. What is more likely to yield success for you is if you price it at or about where the market will support the price, then you will get one, possibly more buyers jumping in enthusiastically. If there's more than one buyer equally qualified and they start competing for it, it will simply push the price up, possibly over the asking price. It's very hard in New York to leave money on the table. So try not to get caught up in thinking that if you are ambitious with your pricing, you're helping yourself, you're actually hurting yourself. And this chart is the perfect example of why that is. So essentially where we are right now, takeaway for Manhattan, bit of a buyer's market going on in terms of negotiability. We're not seeing huge declines in the contract activity. We are seeing some decline in the supply. The fall market is beginning to wind down, so buyers and sellers should both be aware that this is the moment to get your deal done unless you want to just wait and hold out to see what will happen for you in the spring market. Okay, that's it. Now let's take a look at what happened in Brooklyn. Okay, so what happened in Brooklyn last week? Well, just as an overview, Brooklyn is definitely faring a little better than Manhattan when it comes to a more balanced market. We remain in a neutral market rather than what we're seeing in Manhattan, which has kind of shifted over to favoring the buyers, at least in terms of negotiability. We're going to start with a 1 week look at what happened with the supply, the contract signed, the off-market properties. There were 167 properties that came on the market. That is a change of almost 2%, down 2%. And the contracts signed were up almost 3%, 114, 82 off-market properties, down almost 7%. Again, as I said, neutral market. We're not seeing that same seasonal decline in Brooklyn in the inventory, at least so far, that we have been seeing in Manhattan. And we continue to see very decent contract signing activity. If we step back and look at the 1 month look, the supply is 773 for Brooklyn, down a little over 16%. Contracts signed, 541, that's up almost 25%. Off-market properties, 407, 29.62%. So we saw an increase of almost 30% of properties coming off the market. We also saw an increase from the month before, up almost 25% of signed contracts. We saw a little bit of a pullback in the supply, but not as much as we're seeing in the signed contracts and the off-market properties. So again, we are in a neutral market in Brooklyn. You can see by the Market Pulse chart that we are holding steady in Brooklyn in a neutral market. We'll have to continue to keep an eye on this and see what happens as we head into these quieter times with the holidays and as we move closer to the end of the year. If we look at the more detailed supply chart, you will see that we are 3,423 for all Brooklyn supply, any bedroom configuration, any price point. That is up about 6% year to date. It is down 3.3% from last month and down about 15.2% from last year. Again, not huge decreases. The supply has been holding kind of steady. It continues to hold steady. If we look at the pending sales, 800, 1,899. Again, all price points in Brooklyn, all bedroom configurations. We're seeing a pending sale decline down about 29% year to date, up almost 6% from last month, and down almost 32% from last year. As we're also seeing in Manhattan, a decline in the pending sales. We know that this fall market has been a bit lackluster. That doesn't mean that deals aren't getting done. They are. People are signing contracts and properties are selling. But we're just seeing less of that activity than historically we do in the fall market. Okay, that's it for Brooklyn. And that is also it for this week's look at the state of the New York City real estate market. As always, any questions, post them below. Please subscribe if you find this kind of information to be helpful to you. And as always, feel free to share these videos with anyone you think they may benefit. I'll be back next week with the very latest news on what is happening in the New York City real estate market, from the luxury market to the Manhattan market to the Brooklyn market. In the meantime, take care.